Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, most equity markets made a recovery at the end of trading last week. Wall Street ended up higher, up 2%, and that kept rises of similar levels in most other markets. The Nikkei was up almost 6%, although both the Shanghai and Australian markets were up a more modest 1%. Part of the more upbeat tone is the continuing good data sets that are being released. They were there during the recent bout of anxiety, but they seem to still keep coming. Over the weekend, it was reported that sales of houses in the US surged back in December. And both the latest US and Europe factory PMI reports out over the weekend were in positive, solid territory. Even the report for Japan was positive. But the consequences of the severe weather in the US Northeast may echo in future reports. Over the weekend, the latest edition of the Demographia Affordability Survey was out, featuring Auckland as the world's fifth most unaffordable city after Hong Kong, Sydney, Vancouver and San Jose, California. For Auckland, that is quite a leap from the previous year, where it was 14th. Looking at the detail, however, this survey has median household incomes up at $77,500, up 3.2% in a year and up 9.8% in 2 years. And all three data points seem dubious to me. They also have the median Auckland house prices up 22% in a year from 2014 to 2015 at $748,700. REI and Z only reported a maximum 15% growth in any month last year. Despite these factual flaws, however, the survey is useful in shining a light on the unaffordability issue. In another demographic note, both Beijing and Shanghai have launched targets to keep their populations below 23 and 25 million people respectively. Chinese population control policies are shifting from family to city. Another tough balancing act is being played out in their central bank. A leaked memo from the People's Bank of China shows serious regulatory tension over how to keep up liquidity, especially during the Chinese New Year holiday break, while preventing the yuan from depreciating fast. The perils of a centrally controlled economy. And back in New York, the benchmark US Treasury 10-year yield has bounced back somewhat and is now at 2.06%. That is up 7 basis points and the biggest single-day rise since the last Fed meeting when rates were raised. Locally, swap rates rose but more modestly, although since Thursday, the cumulative gain is pronounced. The oil price has also had a good short-term gain. It is now at $32 a barrel on both benchmarks. Iran's re-entry into the post-sanction world has brought a 114 airplane order with Airbus, and the country's authorities are also reported to be negotiating a large order with Boeing. The gold price is holding at $1,100 an ounce, and the Kiwi dollar ended last week slightly softer, but up from Thursday's lows at 64.9 US cents, 92.6 Aussie cents, and at 60 euro cents. The TWI will start the week at 70.6. I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.